Go ahead, Hogue. Give it
Good
to him.
morning and welcome back to the Market Prep. Today is Thursday, August 31st. Hope you enjoyed the big blue moon that was out last night. Second full moon in the month of August. I mean, it can be a while till we see one of those again, probably. And it's a pleasure to be with everybody. I have missed all of you. Thank you all, everybody that sent me an email asking how things are going, all of those things. I really appreciate that. And we're going to be doing the prep today and tomorrow, and then doing a launch of Top Step TV on Tuesday. Yes, next Tuesday. Monday is Labor Day. Take the day off. We'll see you on Tuesday morning with Top Step TV. We're all looking very forward to that, and we're hoping that you're going to really enjoy what we've got coming for you. As always, on the Market Prep, we are focusing on context in these markets, always remembering risk management and remaining patient in our trading. God, it's good to be back. 7:30 this morning, we had some economic numbers come out. The jobless claims came out lower than expected as far as the initial jobless claims. They were looking for 235,000. It came out 228,000. That's the lowest number in 4 weeks. Continuing jobless claims were a little bit higher than they were expecting. But the big number this morning, the core PCE numbers, they came out as expected. Now, that's okay. That's good. But they were expecting a slight uptick in the year over year, which is what they got, 0.1% higher, 4.2%. And that's what it came out at, 4.2%. The core month over month, 0.2, and that's what they got. There's no real change in that either. So markets looking like they are maybe going to put together a nice 5-day win streak. We'll have to wait till the end of the day to see that. Well, we also at 8 o'clock this morning, we have one of the talking Feds speaking. Collins is speaking at 8:45. The Chicago PMI comes out. And of course, for you nat gas traders, I feel for you. At 9:30, the nat gas numbers come out. So yeah, we've got U.S. equities looking to keep the streak going. We close higher today. That would be a win streak of 5 straight days. Got a little bit of headwinds, though. You know, the digestion of the PCE numbers is going to take a little bit of time for traders and investors to look at. And don't forget, we have unemployment, non-farm payrolls tomorrow. So there's still a lot on the plate as far as economic numbers that we're going to be dealing with coming down the pipe. Crude prices remain firm, of course, after the EIA announced almost an 11 million barrel draw yesterday, and the fact that we're coming into the Labor Day holiday, which is typically the peak summer driving period. So a lot of demand, crude oil on the upside. It's going to be a big weekend. I'm looking forward to, a nice 3-day weekend and starting all new again on Tuesday with Top Step TV. We're really looking forward to that. The VIX this morning is a little bit lower, 13.74. The dollar index up slightly at 103.45. And the yield on the 10-year continues to slip lower at 4.09%. It was 4.11% yesterday. So a little bit of a lower rate here for the 10-year. As always, please make sure you hit the lucky like button. Share a comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel so you can get notifications when we do go live. And it's great to see everyone this morning. One of the questions I've been getting a lot on the emails you guys have been sending is, when is group coaching going to start again? I've got a new link for it. You're going to have to re-register. I put the link in the chat, so just click on that, register. The first group coaching session will be Wednesday. They're still going to be on Mondays and Wednesdays at 12:30, but we're not trading on Monday. It's Labor Day, so take the day off, and we start group coaching again on Wednesday. Looking forward to seeing all of you there. I'll put the link in maybe again later on, and again tomorrow morning for the final market prep as we know it. It's the end of the prep as we know it. Good morning, everybody. Great to see everybody. Duke, Kaylee, Barry, Tachyon, Fred. Good to see you, Fred. Dan Trader. It's good to see everybody. Bear goes long. Amanda, summer is going a little crazy, but it's going okay compared to yesterday. The previous day, unchanged volume and overlapping to higher value or just higher value. Well, Amanda, we're going to take a look at that in the charts here very shortly. And if you know me, I'm constantly monitoring volume, open interest, delta, all of the different features that we talk about here on the market prep as to kind of gauge the success or lack of success of the auction process. You know, when the market is directional, I like to, if it's going to continue to go in that direction, I'd like to see a little bit more volume, but the volume in the equities and the S&Ps has just been really kind of dismal. But it is summer. We're ending August. Europe is going to be getting back down to business. Looking forward to a very interesting and hopefully profitable September. And Lacey says hello, everybody, as well. She's around here somewhere, just kind of lazing around. Still the center of the universe, though. Extra scratches, Bear goes long for Lacey. She'll like that. Gare, good morning. Jason, good morning. Itai, Grounds Hero, it's good to see you. Jay, Andrew, it's good to see you. Robert, missed you guys as well. Kevin, good morning. It's great to see you. Yeah, and to see how you heard Jack. Yeah, he was letting me know that I was on. It was a little bit slow getting onto that, but a little rusty coming out of the transition. That's all right. We'll nail that tomorrow. Looking refreshed. I hope I'm feeling refreshed. I'm feeling kind of old, but Rob Arona, good to see you. Sarah Hall, it is great to see you. Prayers and love as always to you as well. Scott, Dan Trader, good to see everyone. Travis, Luke, Dan, JT, it's good to see you this morning. How's Bluebell doing? Josiah, good to see you, my friend. Mango, Kevin, S&P, SPX has been unable to find acceptance back in the range of the 2nd of August after gapping lower the 3rd on attempts thereafter. It's back there today. It's going to be an interesting day, right? George DK, it's good to see you. My brother Rick, the Randolph to my Mortimer, it's good to see you this morning. Mango Heist, Jim, Sean, Bill, Santi, Mark, it's good to be back. Morris, Captain Price, Stiff Shift Dan, good to see you. Dr. VJ, it's good to see you. Kevin, aren't we all? Yeah, I know I'm feeling a little bit old, right? Signed up for group coaching, but didn't get a confirmation email. I'll check that out, at least so far. I'll make sure that those are going out in the Zoom. I have a tendency of messing up those Zoom webinars and meetings, so I'll double check that. You should get a confirmation email. Rob, good to see you. MD, Shiftan, good to see Travis. Fred got confirmation, but it was a little delayed. Okay, so maybe I didn't mess that up. I have a real propensity to mess up those Zoom webinar and meetings when I get those set up. So that link that you have should be good through the end of the year. So just hang on to that. I know I said that about the last one, but that one I messed up, and we have a new link. So looking forward to seeing everybody there. All right. We've taken care of all that business. Let's get down to what's going on in these charts. We're going to just check the E-mini S&Ps, the NASDAQ Gold, and Crude here this morning. Theo, good morning. It's nice to see you. Welcome back. It's great to see everyone. All right. So here's the S&Ps. All right. Bluebell is happy and healthy, flying all over the place. I just love that bird. Such a cute bird. All right. ES volume has maintained somewhat. It's a little bit higher yesterday, a little bit off yesterday and futures and on the New York Stock Exchange, just about 3 billion shares traded. And that's been kind of a trend in the month of August. It's just been kind of a low volume month. Open interest, however, continues higher. So Amanda, not only is it the volume that I'm looking at in a directional market, but it's also the open interest. The open interest is the total number of outstanding contracts at the end of the day yesterday. You can see it on the CME, cmegroup.com/bulletin. And you're going to get an initial or a preliminary sheet that's going to tell you about the open interest. It's not going to be final until later on. It takes the exchange that long to determine how many outstanding contracts there are. But yesterday, it says on the preliminary, we added 10,000 contracts on this push to the upside. We added like 30,000 the day before. So the market is exhibiting some of the traits of a continuation, but not all of them. I'm giving this rally this week, which was, I mean, you look at it, it looks really pretty substantial on the charts, right? We could close 5 straight up days, which been bringing open interest. So there is money coming into the long side, but how good is it doing? A little bit low on the volume, of course. And, we did have higher open interest yesterday, but it wasn't great. It's only 10,000. So is this market slowing in its upside move? We've accepted, obviously, above weekly kickoff high. We still have a potential head and shoulders pattern here on the daily chart. Have we broken that? Have we broken the upside, or actually the downside potential of this head and shoulders? I mean, we got a shoulder here and a shoulder here. We're kind of holding above those. As Kevin was saying, we're in an area that was previously rejected. Are we going to continue to see the market can move to the upside? So this week's upside move, I'm giving a B- because of the lack of increasing volume at higher levels. Yes, Amanda, you certainly do have value moving higher. And if anybody listens or is familiar with Jim Dalton's work, his focus is on value. So we've got value moving on higher open interest, waffling volume. It's just doing okay. What does it mean for us today? Well, here we are. I'm just going to go through. Here's Monday, Tuesday, Wednesday, Thursday. Since we put in these lows here, and we should be noticing these lows are excess lows on the daily chart. Lots of long shadows on these lows. Price got too cheap. Buyers took over, got too cheap. Buyers took over, and they remain in control at this point. So what are we looking at for today? We have a big jump in open interest here. It's a P-shaped profile, but you can run into short covering and some buying. There was some pretty substantial positive delta here. It was like 37,000, 38,000 at the end of the day. So we knew we had a lot of aggressive buyers. Obviously, price moved higher. Well, we moved value higher as well. Smaller range. It's a kind of a normal variation extreme day. Do we have any overnight inventory is my next question. Well, we opened right about here. We're trading here where we're seeing some of our overnight inventory getting too long and already kind of reconciling that information. So then it starts to think about, are we going to be opening with a gap? If we open with a gap and can't close the gap relatively early, I would say the probabilities are greater that price can continue to move to the upside. But it has to continue to bring in new business. What do I mean by new business? Well, that's that open interest coming in. Where the market's going to continue higher, we're going to want to see volume and or an increase in open interest. So early in the session, opening out of range and out of value from yesterday, we may find good trade locations early in the session, and then of course we'll probably end up at some point settling into a range and waiting for unemployment tomorrow. Take a look at the TPO charts here. So here's our excess off those lows. Excess in the daytime frame here little bit less excess here, but on the daily, those long shadows at those bottoms are indicating the market got too cheap and buyers have taken over. They're still in control now. Yesterday, day before yesterday, big directional upside move, P-shaped profile. You might think that we would have lost open interest because that's typical of short covering, but the short covering met new buying and we added open interest. We did that again yesterday. We have an excess low, a low excess high. The point of control is very high in this profile. This is a normal variation, extreme day. The market is already seeking different levels to facilitate trade. That's the market's job, is to facilitate trade. It's seeking the level where buyers and sellers are comfortable conducting business. It's been doing that all week. It is continuing to seek those levels. The NASDAQ is closer to an important inflection level in the weekly kickoff. We're looking at a lot of space above here. You know, if we're going to be looking for points of control or, gaps, well, here's a gap. Here's a point of control. It's way up here. We're looking at 4,600 before we really run into any visual targets and or opportunities. We got the gap here. We've got this point of control. There is one TPO point of control sticking out right here about 45. And we've already kind of looked at it for in the overnight session. So again, opening with the gap, can't close the gap, look for continuation to the upside. Opening outside the range brings the value area special situation play into play. If we open outside the range and find acceptance inside value from yesterday, that could give us a little bit of a pullback. And again, the PCE numbers came out as expected. So that's already in the market. You know, what are we going to do today? Are we going to just kind of position ourselves and hedge for tomorrow's unemployment number? Are we going to hear anything new from any of the talking feds? So we're just going to be patient, look for good trade locations as the day goes on. And again, the opening might be an interesting opportunity for us, that opening range, that first minute. Here's the NASDAQ, again, in a more interesting type of situation because we've got the weekly kickoff high, or we got to it yesterday, at least within 5 ticks of it. The difference is volume low, and we lost open interest. So yesterday it looks more like short covering, which takes buying power away from the market. Short covering, if you have to buy, as soon as you cover those shorts, you're taking your buying power away from the market. So losing 1,200 in open interest yesterday, you know, if I give the rally in the S&Ps a B minus, I would have to give this a C. Volume is low, open interest. We lost open interest yesterday. The market is wrestling with this important inflection level. Weekly kickoff high, 15,524. The high yesterday, 15,522.75, 522.75. So got within 5 ticks of it. I'd say that's pretty close. And there's nothing finite in futures trading. Everything is a zone, right? We've got to remember that everything is a zone. The market can go through it and reject. The market can go through it and accept and continue. So this is going to be a pivotal area for us today. You know, we're wrestling with that weekly kickoff level. So, you know, these are areas of importance where I look for longer time frame traders to adjust inventory, whether they're going to get out of some longs or enter some shorts, or whether they're going to get into some longs or exit some shorts. I'm looking for that to happen around here. Now, once in a while, ladies and gentlemen, you are going to see one of these weekly kickoff levels become very magnetic. And that's because the longer time frame is taking their time making any decisions around these areas. Yesterday, the market popped up there and then came off a little bit, not much. But also, have we broken our head and shoulders pattern. I would say if we accept and show meaningful participation above weekly kickoff high and build some volume and build some open interest, that's going to, I think, break this head and shoulders structure. It would be basically a failure to finish it in the way you would think, but it's not game on yet with a head and shoulders until you accept below the neckline, which we have not done. So take a look at the 30. So there's that weekly kickoff high, traded to it, pretty decent pullback off it, traded to it. It's been struggling to hold above it. The market is already showing a little bit more weakness in the upside auction because there's probably low probability of the NASDAQ opening with a gap. It's looking probably like the S&Ps are probably not going to open with a gap either. Well, that's okay. That tells me, all right, I can relax a little bit and look for better trade locations as the day goes on. We're in range. We're in value. Right, Amanda? Right, Amanda? So we're in value. There's a little change in perception. The numbers came out as expected. What's coming down the pipe? Unemployment tomorrow. So, it is entirely possible for these markets to just remain somewhat range bound today in anticipation of what's going to happen tomorrow. What about the TPO charts? Normal variation, extreme points of control are in the upper quarter. It looks like a short covering rally, and that's what open interest is telling us. However, we have an excess low and a low excess high. The upside auction does not appear yet to be completed. Look at the day before. We have a weak high. A low excess high indicates that the market may not quite be finished with the upside move. I'm really, I think, going to try and focus on the range high from yesterday, or the overnight high and the overnight low or value low from yesterday before looking for any opportunities here. What about crude? So summer driving demand is here. It's the biggest driving weekend of the year, Labor Day. Lots of folks are going to be out doing stuff, and as well they should be. Go and enjoy life. Make sure you take Monday off because we can. And so, with the hurricane, there was the threat to some of the rigs in the Gulf. I'm not seeing any big news about a lot of them closing down or anything like that. So I don't think that's necessarily what we're dealing with here. I think we're dealing with the drop in crude stocks. The gasoline stocks weren't that bad, but the demand is here, right? It is summer driving season. The volume yesterday was a little bit better, but we lost 14,000 in open interest. Now, the market is still continuing to push higher. Just because we lost open interest doesn't mean that there's new interest in continuation to the upside. The market really just opened. We'll have to see what happens here because we are really getting close to weekly kickoff high here, which is 82.95. We got within 10 ticks of it so far. So this offers potential opportunity, if only giving us the opportunity to limit risk. Here's the 30-minute. So we've got some pretty long overnight inventory here, don't we? We opened here. We've been steadily pushing price higher. We're getting pretty close to an important inflection level. So all of these late to the party new longs here are really going to be looking for help. And if they don't get help up against this, they're going to bail. There's going to be a pullback. If the pullback doesn't close the gap, it might be an opportunity to look for a long. But right now, the market is at a weekly kickoff high. It's a little extended to the upside. It's going to take a lot of energy and a lot of new business to break out above this level and to continue above it. And again, it's just an important inflection level. There's nothing finite. It's a zone, and it offers the opportunity to limit risk. Opportunity to limit risk is what we're all about here. Take a look at the TPO chart now. Where did it go? There it is. I'm right on it. So the yesterday's profile, I'm looking at this going, well, it's low excess low, it's low excess high. What is a trader to do? Well, obviously the market has opened with a gap. If it doesn't close the gap, we'll look for potential continuation above weekly kickoff high. If we can't accept above weekly kickoff high, all of these overnight longs probably get a little bit nervous and offer an opportunity for the market to pull back. You may be able to take advantage of that pullback. You may find that the pullback doesn't do what you think it's going to do, which is equally as important as what it does, and find an opportunity later on in the session. So we're right here. I mean, we're basically at weekly kickoff high, 82.95. I may have to go back and check and see what happens as we get closer to the end of the prep here. But we just want to get through gold here. Gold, we had our first look above weekly kickoff high, which was 1990. 1990. I'm pretty sure last week's was 1997. Yeah, 1977. Yeah, 1970 is weekly kickoff high. We tested it yesterday. So far, we're seeing potential excess above that level. We got pretty far above it yesterday. We came back and basically closed right to it. Settlement was 1973. So within 30 ticks is settlement. And then the day finished, the extended trading hours a little bit closer to the important inflection level than that. Overnight, we looked above. We're showing potential rejection of this area above weekly kickoff again. Watch the dollar. Yesterday, we did add 5,500 in open interest, but the volume was a little low. So, that additional 5,500, are those going to be laggard longs? Are they shorter time frame? We'll have to see. Here's the 30-minute chart. So there's our move through weekly kickoff high, showing some signs of acceptance, and then finishing the day right down here in regular trading hours. It finished right there, right on it. Last night, range bound inside yesterday's range. What are we doing with this? Well, I'm really kind of centering my thoughts on weekly kickoff. But you got to be careful. I mean, if you're just going to go short below and long above, short below and long above, if it becomes magnetic, which sometimes they do, it'll chop you up. Be patient. Look for the market to give you some sort of signal. Make it come to you. Make it give you a cheap opportunity, and then engage. Here's the TPO chart from yesterday. Excess, the initial balance wasn't neither the high. Well, it was the low of the session here. It was not the high, but a normal variation, neutral day after a gap. The market, I think, is primed to look for new levels to facilitate trade. Yesterday was all about trade facilitation and the range-bound day that we had. We're looking for this market to look for new levels with which to facilitate trade. It's going to go looking for more business with the low volume we had yesterday. All right, let's go back and see what's going on with crude here. I want to take a quick look. So within 3 ticks of weekly kickoff high, even if you're not trading crude oil, it might be kind of fun just to watch it today to see what happens around this weekly kickoff level. There's nothing that seems to happen exactly the same way twice in anything, and especially in markets. And when you do get the right answer, the market's going to change the question. So, all right, we're going to get down to business here, ladies and gentlemen. It has been a pleasure being with you this morning. I really enjoy the sessions that we have. Looking forward to getting back to group coaching, looking forward to Top Step TV, which begins on Tuesday, kind of a soft launch. You're going to see me. You're going to see Michael Patak. You're going to see our good friend Eddie. You're going to see a lot of folks. We are going to be doing some live trading right off the open in the S&Ps and the NASDAQ. We've got Dan coming in to talk about Crude. He's a crude trader, so we're really looking forward to having more time to spend with traders. And so again, looking forward to that. I was looking very much forward to getting the last couple of old school market preps in. We'll do it again tomorrow. Then maybe we'll have a drink or something. And shit, then here's the link again for group coaching. Just register. The first rebirth of it will be Wednesday at 12:30. Looking forward to seeing everybody there. Trade well today. Let's take our deep breath. Remember the deep breath. Stay humble, grateful, creative, and centered in your trading today. Blessings to you all. I'll see you tomorrow morning, the final market prep. See you then.